Let's talk about the Zillow article that came out, and they're predicting a market shift. Let's talk about that. Because I don't know about you, but when we talk to people, whether we're going to buy a car, we're going to buy a home, invest, whatever it is, we're trying to think, hey, where is the future in this? And I think that's one of those things where, the first thing is, what does Zillow say? They say slower price growth. What does that mean?
Well, it's interesting. I read the article, and one of the things I noticed is that it did, in fact, kind of early in the article, it opened with their estimate that home values are going to be up 0.3% at the end of 2026. That's pretty modest.
Yeah.
So then they try to go into sort of explaining, kind of the underlying basis for, that kind of prediction. And they pointed out a couple of things. Back in March, they apparently had forecast that the improvement in terms of increasing existing home sales rate, that back in March, they were predicting that for 2026, they would be up 3.4% year over year. And of course, if that came out to be true, that would kind of run in conflict with the idea that home price growth is going to slow, or the property price growth is going to slow, because if that's pretty good increase in demand, and you would think that would help firm up prices and even get them to go up a little bit. But what happened was, after March, they revised their forecast, and now they're forecasting 0.5% year over year for 2026 for existing home sales.
Wow.
So you're like, okay, so they are predicting, therefore, that there's going to be slower price growth. They also, by the way, in the article, made a point of emphasizing inventory has grown. So you've got, we revised our estimate that existing home sales are going to not be 3.4% for 26. They're going to be 0.5% increase for 26. And we are pointing out there's more inventory, but we also think the problem here is affordability in terms of interest rates. So again, it's sort of like it's high borrowing costs, they called it. And so to me, again, this is another example of where the interest rate part of the equation kind of gets to be the fall guy, and it's all about these high interest rates. And as a consequence, that's why affordability is such a problem. It's, in my opinion, not enough focus on what the price of the home is, because, again, if you have more inventory, and that's what we've been seeing pretty much all year,